So another question here, in one of your podcasts or investor calls, you had recommended not to deploy more than $250,000 in a year. Is there any tax reason for this? I don't remember the context of this. I think what I was getting at, a lot of investors, they'll read that Rich Dad, Poor Dad book, that purple book that is the red pill of finance for a lot of people. And they're like, oh my God, I got to get out of this like crap in investing in for all my life. And they go bonkers. They're going into all these alternative investment, private placements, and syndication deals. And I've had people that invested $500,000, $1 million in 9 months. And I personally am, whoa, that's a lot of investing. Because the thing is, what's hard about syndication is anybody can put one together, right? Anybody can invest in it. But like in terms of putting them together, anybody can do it. You just pay $30,000 and supposedly you can magically do it. So I say that jokingly because not everybody should do it. And I sure as heck am going to invest in those deals with those sponsors. How do you determine who's legit? Well, it's really hard to determine who's legit. And if it were me, I would take the approach of putting my money in, going with the minimum, and seeing how it works. Call me crazy, but I think that's a prudent strategy, especially when a lot of people that come into our group, they've been investing in the regular 401k stuff, the traditional investing model for 10, maybe even 40 years. We have a huge range of ages in our group. Don't throw it away on some bozo who you just met. Just today, someone just mentioned that, yeah, they lost $100,000 investing with this other sponsor, and they're happy that they found this. But it takes some luck. And I think to really feel confident into knowing that you're putting your money with good stewards is to build your network with other passive investors so that you feel comfortable knowing that other people have had good success in the past. But likely a lot of us, and myself included, we don't have any people who are investing in these types of alternative investments. Most of the people that we associate with or go to work with, or our families or parents, just invest in the traditional mainstream retail stuff. So we don't have that network. But what I'm saying is that's why we created Simple Passive Cashflow, so that there is an opportunity to find like-minded individuals. And when you do, that's when magical things happen. And if you want to stop screwing around, that's where you join the family office Ohana Mastermind, the phone. I'm just saying. But I think that's the way into it. And maybe I said the $250,000 in 1 year thing. I think maybe where that came from was like, maybe you can go into a handful of deals in that first year with, minimum investments being anywhere from $50,000 to $100,000. So you could go into a few deals and you can sit and wait and watch. See how the sponsor performs. Did they run off with your money to Mexico? They say that what they were going to do. Did quarterly distributions start when they said it was going to? So that would be the way I would do it. When I started to buy rental properties, I bought my first 3 in Seattle. And my big first pivot point as an investor was investing sight unseen in Birmingham, Atlanta, and Indianapolis in 2012, 13. What did I do? I bought one property in Birmingham. I see how it worked. I paused for 6 months to a year. And then you know what? The damn thing worked. So I unloaded all those Seattle properties that had reported cash flow, and I went into and parlayed my money into those other investments. So to me, I'm not saying that you're going to do this, but I like the approach of getting proof of concept and then going all in.